Welcome back. Now, Northam Platinum has had a tough 6 months, recording profits that almost halved due to lower metal prices. And joining me with greater analysis on those numbers is company CEO Paul Dunne. Paul, thanks so much for your time today. Now, another period of downbeat prices. I mean, these are the uncontrollables. Talk to me about how the group has been running things operationally to try and somewhat offset the impact of those low metal prices.
I think operationally, Northam has performed reasonably well. All the mines put in a creditable performance, I would say. A feature from the metallurgy, I think, is worth pointing out. As we warned up front in August, this year will be a lopsided year because we did repair, we call it rebuild actually, our number 2 furnace on a planned basis, which ended in August. Now, what that does is it inhibits your cash flow for that period of time whilst you're undergoing the repair. So we've warned up front, it will be a more difficult first half than the second half. This, of course, is the interim results. And we've just put in a operating profit performance of 1.1 billion rand, despite the furnace. Now, in the second half, you will see a much stronger performance on revenue, and that will flow down to the bottom line as we unwind the stock that we built up in the first half.
We'll rather zoom into those operational activities in just a bit. I just want to ask you about the current PGM cycle, and I did ask you this the last time we spoke, but you know, it doesn't seem like we are seeing an improvement in prices at the moment. Is there anything more concerning about the current dip in prices this particular cycle? I'm looking at, you know, the macroeconomic picture where we have downbeat global growth, downbeat local growth. We've got the tariff issue, and we also have, you know, Eskom issues and Transnet issues here at home.
No, you're absolutely right. I would say very severe is the word I would use, a very severe market condition in terms of the pricing for the metals. And it's worth pointing out for the viewers that what that means is that miners, refiners, and recyclers all together, we under the cosh. And we mustn't underestimate how severe this pricing scenario is for the whole world's PGM industry. It's not easy, that absolutely for sure. But at the end of the day, it also indicates that there's an unsustainable market condition that will be resolved one way or the other. Northam's view is quite clear. We think we will recover. And the longer the downturn remains, the harder the recovery will be in the future. Harder meaning you might get a more pronounced price response on the upside. For the moment, though, of course, you're quite right. The rand basket price that we received is flat, and it's been flat for the last 2 years.
Now, talk to me about how then you reposition yourself in this current environment. I'm looking at your debt levels. I'm looking at also, you know, the capex spend to keep these mines running as well.
Yeah, we will pursue our growth strategy despite the lower prices. The growth strategy is premised on production into the 30s. It's not about the short-term volatility inside the market that we're currently experiencing, although, as you point out, it's not been short-term. It's been a couple of years now. But this is the nature of the PGM cycle. I've been in this industry for quite a while, since 1980s, actually, a very long time. I've seen a couple of these cycles. They're pretty typical. They remain lower than you think for longer. But ultimately, they do respond to the cost of production. And, you know, on a risk-adjusted basis, one can go out and buy platinum for cheaper than the industry can produce it for. And clearly, that's not a sustainable outcome forever. The price will recover, and we will position Northam to be able to benefit when that time comes.
Paul, thanks so much for your time and just taking us through the 6 months that was for the company. That was Paul Dunne, CEO of Northam Platinum.